Rivian is having another rough day in the market, hitting a new all-time low today. And things just keep getting worse for the company. Not only are there macro challenges from rising interest rates, from inflation that seems to be stuck in that 2.5% to 3% range, but also competition is heating up. And today the big news was that Ford is reducing the price of the F-150 Lightning, one of the most direct competitors to the R1T, by as much as $5,500. So they are clearly not giving up on the electric truck market, and that could be bad news for Rivian because Rivian eventually is going to have to compete on price. I recently covered that GM's Silverado electric vehicle, which the high-end vehicle starts at $95,000, is going to be really compelling because it has a 440-mile range, has a bunch of features that Rivian does not have, and it's a much, much bigger truck. So now we have prices coming down from Ford. I just think competition in this space is getting worse and worse, and it's getting more expensive to buy vehicles, which is bad news for Rivian. So I'm going to dig into some of those news items today, how that might impact Rivian, and then ultimately get to the financials and why we should be so worried about Rivian. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with a recent announcement of production and deliveries for Rivian, because I haven't covered that yet on this channel. This is a look at Rivian's production and delivery numbers for the first quarter. 13,588 vehicles delivered in the quarter and produced 13,980. So pretty good match between deliveries and production. One of the things that I have criticized with Tesla is they're actually building inventory because they're producing more vehicles than they're delivering. That's going to be one of those things that's going to eventually result in lower prices, which we've already seen on a pretty significant level at Tesla. So they're at least delivering everything or almost everything that they're producing at Rivian. Now, production is going to come down a little bit in the middle of the year and pick up towards the second half of the year as they upgrade some of their facilities in the Normal, Illinois plant. So look for that, and that could potentially lead to higher margins and will ultimately lead to them being able to produce the R2 and R3 vehicle in Normal, Illinois, now that they have canceled plans for that Georgia plant. But the bigger news for Rivian today was the F-150 Lightning coming down in price by as much as $5,500. And this is from Green Car Reports. But the XLT standard range is going to be $2,000 lower at $65,090. And the Lariat extended range is going to get a $2,500 price cut, now $80,000. So these are still pretty expensive vehicles, but when you compare it to an R1T, which starts at $70,000 for the baseline package and can go significantly higher if you want the quad motor, that's another $8,000. Now you get to an $87,000 vehicle. If you want the dual motor with the max pack, you're talking about a $94,000 vehicle. So suddenly the F-150 or the Silverado that's come out, both of which are significantly bigger than the R1T, start to be pretty compelling. And this is the challenge for Rivian, is how much pricing power do you have with this vehicle specifically? And I think they're really running out of that now that there's more competition coming into the market. We've even seen that with Tesla. Tesla is facing competition, not only in the US, but especially in China, where there's more vehicles, there's newer vehicles, and they've had to respond by lowering prices. These are not companies that are price inelastic. It's a very elastic price market. On top of that, Rivian is having to deal with some macro issues. And this is the kind of thing that investors need to at least keep an eye on. What's happening with things like interest rates? Interest rates are going up. This is Treasury yields. This is from Bloomberg. And what we want to look at for the vehicle market is going to be the 2-year Treasury yield and the 5-year Treasury yield. So the 2-year is up 40 basis points in the last month. A basis point is 1/100th of a percentage point. So interest rates have gone from 4.54% to 4.94%. On a 5-year basis, they've gone from 4.1% to 4.6%. This fluctuates on a day-to-day basis, but this is going to give you a baseline of what interest rates are going to look like for customers. And any reduction from this, so when you see something like a 1.9% interest rate or something like that, that's actually the auto manufacturer subsidizing the financing of the vehicle. So Tesla is doing this recently, especially in China, is they're saying, hey, we're not going to cut prices, but we're going to offer you really nice financing deals that effectively reduces the margin that you have on your vehicle. So all of these things go into the profitability of vehicles. The other thing, and this was the shocker, one of the reasons that interest rates are up this week is inflation has been a little bit hotter than a lot of people expected. 3.5% year over year in March 2024. That's why the market was down earlier this week. And the simple reason that a company like Rivian would be impacted is if inflation is going up, if the cost of housing is up, if the cost of food is up, people are just going to simply have less money to spend on a brand new vehicle. And when you're talking about a vehicle that's $70,000, $80,000 now at an interest rate of 6, 7, 8%, suddenly that's a very, very expensive interest payment for people who can't just go out and spend that kind of cash. And so the ability to afford Rivian's vehicles goes down both as interest rates goes up and as inflation goes up. This is kind of a worst case scenario for an automaker, but that's just the reality of the market that Rivian's living in right now. And where this really impacts the company is in the financials, because we were not in a good position heading into some of these reports. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I want to start with Rivian's cash flow, because this is really the core problem. Is Rivian's burning through about $1 billion worth of cash. Yes, that has come down a little bit as they've increased some of their production in 2023. Remember that production is going to be flat though in 2024. So they're expecting to reduce costs a little bit, and maybe that cash burn starts to reduce by the end of 2024, but you're still going to have a company that from an operating standpoint is going to be burning through cash each quarter, at least this year, and probably for the foreseeable future, because they simply don't have enough capacity to get to free cash flow positive. The other challenge is that Rivian just simply doesn't make money on each vehicle sold. And this is the chart of the company's margins, both gross margin and operating margin. And this is the core problem, is if margins are coming down for every other automaker, whether that's Tesla, whether that's Ford and General Motors trying to sell electric vehicles, how is Rivian going to respond when they have negative margins today and now are facing price pressure on the vehicles that they're selling? It just doesn't bode well for the company's financials and for the ability to be a going concern. I want to just go through a couple other numbers here. As of the end of last quarter, they had $9.4 billion worth of cash on the balance sheet. And there's also $4.4 billion worth of debt on the balance sheet. And this is really where you get to a financial challenge for Rivian, is they're probably not going to be able to raise more debt because it's going to be so expensive. I mentioned those higher interest rates. Well, what are you going to do when you go to debt markets and you say, hey, we're not profitable, we have a lot of debt already, our industry looks really tough, can we borrow $1 billion or $2 billion? They're going to say, okay, sure, at 12, 15, 20% interest rate. That is what happened to something like the cruise line industry during the pandemic. So I think that avenue for raising money is probably closed for Rivian. The other option would be to simply sell more stock. And that's something that Rivian could do, but that's going to dilute shareholders. So ultimately, this is Rivian between a rock and a hard place. And investors need to realize that that is the reality of the situation for Rivian. Competition is increasing in the electric vehicle market, in the truck market. There's more SUVs coming to market over the next year or so. So I think Rivian is in a very, very tough spot. I don't see a path to profitability or positive free cash flow. And I'm just afraid that Rivian only has a certain amount of runway ahead. I would look to be selling the company if I were management. Look for a strategic partner who's looking to advance in electric vehicles and fund the investments that are needed to build the capacity to build out R2 and R3 profitably. But that doesn't currently seem to be on the table. But given the direction of the stock price, Rivian's just running out of options. That's the reality on the ground. That's why the stock is at an all-time low. And without some major changes, I don't see that changing. But what do you think about Rivian's future? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.